Ping An Group of China stands tall among the world's financial titans, ranking among the top 5 global insurers by market capitalization and recognized as one of the most valuable brands in global finance. In 2024, the group generated an impressive RMB 1.14 trillion in revenue and RMB 126.6 billion in net profit, placing it shoulder to shoulder with global insurance behemoths such as Allianz and AXA. But Ping An is far more than an insurance company. It is an economic ecosystem that touches nearly every corner of life in modern China. Its life and health business protects families from medical and financial shocks, while managing old-age pensions for a rapidly aging society. This is socially vital for a nation that is both graying and growing richer, where an expanding middle class now seeks not only wealth, but security and dignity in longevity. Its property and casualty arm serves as the silent guardian of China's physical economy, ensuring household vehicles, factories, and infrastructure across the nation. It plays a crucial role in supporting national initiatives in energy, transportation, water conservancy, and other critical infrastructure, including projects under the Belt and Road Initiative and the Greater Bay Area Development. In essence, Ping An's P&C division acts as the financial safety net that keeps commerce and daily life running, even in the face of storms and disruption. Meanwhile, through its bank and integrated finance division, Ping An provides a financial lifeline to over 204 million retail customers, offering mortgages, credit cards, wealth management products, and insurance under one digital roof. For many Chinese families, Ping An isn't just an insurer or a bank. It's the platform they turn to at every major life milestone. While Ping An's scale and penetration are apparent, few investors recognize that it is, in truth, a technology-driven company, one that sets itself apart from traditional insurers. Beneath the surface of Life Plus Insurance Plus Bank lies a technology-powered engine built on billions of data points and proprietary AI-enabled algorithms, quietly learning how to predict, price, and protect. Each division may look independent on paper, yet in practice, they are deeply interlinked, sharing data, customers, and insights in real time. This seamless flow of information between insurance, banking, and healthcare has transformed Ping An into something far greater than a financial conglomerate, a living digital organism embedded in the social fabric of China, where technology is not just a tool, but the very DNA that connects its vast ecosystem. Yet, the market has largely failed to take notice. Ping An is still perceived as a stodgy, traditional insurer bound by regulation and slow growth. Even after its recent recovery, Ping An's stock trades at only 6 to 7 times earnings, a valuation that hardly reflects its scale, sophistication, or digital transformation. It is one of the great ironies of the market. The bigger Ping An becomes, the more it is misunderstood in its complexity. For patient, discerning investors, this mispricing could be an opportunity. The question is not whether Ping An is large or profitable. It clearly is. But whether its technological transformation will finally translate into visible financial outperformance. When that happens, will the market finally wake up, re-rate the company, and trigger the next wave in its stock price? Hi, my name is Freeman, and I'm an independent investor focused on stocks listed on the US, Hong Kong, and Singapore exchanges. I've always believed that insurance companies are one of the best proxies for middle-class income growth, as well as for the rise in education and financial literacy. China, in my view, is one of the most powerful places where this trend is unfolding. Back in 2016, Ping An caught my attention as the largest player in China's insurance sector. That year, I first bought in, and I've held onto the stock ever since. It's had its ups and downs, reaching nearly HKD 90 in January 2021, only to slide back below HKD 30 in 2024. I doubled down last year at around HKD 32, and today it's comfortably above HKD 50, a bet that's paying off. Over nearly a decade of holding this stock, Ping An has evolved quietly in ways that many may not have noticed, particularly in its technological transformation. While the stock has steadily recovered toward HKD 60, I still believe it's underrated. Few analysts have truly recognized what Ping An has become, a technology-driven ecosystem that unites insurance, healthcare, and finance into a single intelligent platform. Yet the market continues to value it as if it were merely a traditional insurer. That's why, today, I've decided to take a closer look at Ping An's transformation, particularly how it deploys technology in big data analytics and AI, to assess whether this technological drive could translate into a stronger competitive moat, improved financial performance, and ultimately, a higher stock price. Before we go deeper, let me emphasize that this video and discussion represent my personal views and are meant for informational and entertainment purposes only. Nothing here should be considered financial advice or a recommendation to buy or sell any security. Please do your own research or consult a qualified financial advisor before making investment decisions. At the core of Ping An's empire stand three powerful pillars: life and health insurance, property and casualty, and integrated finance. Each pillar is vast in size and scope, serving hundreds of millions of customers across China. But Ping An's real strength lies not merely in its scale, it lies in how these pillars work together, feeding data, insight, and customers into one intelligent ecosystem. Ping An's Life and Health (L&H) business provides protection, annuities, and healthcare coverage to over 240 million customers. Within this pillar sits Ping An Health, better known as Ping An Good Doctor, China's largest digital health platform, boasting over 400 million registered users. It bridges insurance, telemedicine, and hospital networks, turning Ping An from a policy issuer into a healthcare enabler. The P&C division provides insurance coverages for homes, vehicles, factories, and critical infrastructure across the nation. It plays a highly important social role in protecting ordinary families and businesses by absorbing the financial shocks of everyday risks arising from accidents and natural disasters. To the company, this pillar also provides stable, recurring cash flow, balancing the longer-term liability nature of life insurance and anchoring Ping An's overall financial resilience. The third pillar, integrated finance, connects Ping An's insurance strength with modern banking and investment. At its heart is Ping An Bank, one of China's top 10 commercial banks with RMB 4.8 trillion in assets and tens of millions of active clients. Through Ping An Bank, the group extends into wealth management, securities, and trust services, allowing customers to manage nearly every aspect of their financial lives, saving, investing, and insuring within one unified platform. What makes Ping An truly distinctive is that these businesses are not isolated silos. They are bound together through an immense network of big data and AI, built over more than 15 years of continuous technological investment. Every interaction, whether a good doctor consultation, a car insurance claim, or a mortgage application, feeds into a shared data spine. Even Ping An's vast call center and agent network have real-time access to a customer's consolidated financial and health profile. This seamless integration turns the group's vast scale into a strategic advantage. Millions of diverse customers generating a torrent of behavioral, financial, and medical data that becomes the raw material for insight. Through continuous application of big data analytics and AI, Ping An delivers what few traditional insurers can: services that are at once integrated and personalized, tailored for each individual. By linking data across its three business pillars, Ping An gains a 360-degree view of a client's needs and risks. For instance, medical data from Ping An Good Doctor enhances risk assessments for health policies, while banking data from credit cards and savings behavior helps identify the most suitable insurance or wealth products. This integrated approach allows Ping An to engage customers more effectively, enabling better cross-selling and product customization. The result is a self-reinforcing data flywheel that drives customer loyalty. The cycle is simple yet powerful. More engagement generates more data. More data enables sharper insights. Sharper insights drive more tailored services. Tailored services deepen engagement and loyalty. Over time, this transforms customers from policyholders into lifetime partners. The impact is evident. Users who engage with Ping An's health ecosystem hold 4 times higher assets under management through Ping An's integrated finance than those who do not. For more than 15 years, Ping An has been laying down one of the most sophisticated digital infrastructures in global finance. To achieve this, the group invested a staggering RMB 100 billion, approximately USD 15 billion in R&D over the past decade. For a company earning about RMB 130 billion in annual profit, this amounts to nearly 8% reinvested into the future. The capital has been deployed to build enduring foundations, cloud infrastructure, health tech ecosystems, and next-generation AI capabilities. Today, Ping An commands an army of more than 23,000 technologists, made up of over 3,000 scientists and 20,000 IT engineers, a workforce larger than many Silicon Valley firms. Their collective effort is organized under what Ping An calls the 953 framework. 9 data centers forming the digital backbone that links its insurance, finance, and healthcare platforms in real time. 5 AI laboratories advancing research in computer vision, natural language processing, blockchain, and medical data analytics. 3 technology subsidiaries, Ping An Technology, OneConnect, and AutoHome, that commercialize innovation and export it across industries. This architecture supports one of the richest data reservoirs in global finance, comprising trillions of records from every branch, call center, and mobile app. Equipped with a complete customer profile, Ping An's service agents can deliver experiences that feel both personalized and seamlessly integrated. The intellectual output is remarkable. Between 2021 and 2024, the group filed more than 55,000 patent applications across fintech and health tech, placing Ping An among the world's leading patent owners in both fields. Yet despite the scale of its R&D outlay, Ping An applies rigorous financial discipline to every investment. As co-CEO Michael Guo emphasized, every dollar we spend on technology must create measurable value in efficiency, retention, or long-term advantage. To achieve this, Ping An manages its technology spending through a structured 3-bucket framework. 1. Foundational infrastructure. These are long-horizon commitments: data centers, proprietary cloud systems, cybersecurity, and AI computing clusters. They serve as long-term strategic moats, essential for scale, resilience, and regulatory compliance, even if they do not generate immediate profit. 2. Applied projects. This bucket funds technology with clear, measurable financial impact. Examples include Ping An's AI-driven claims system, which cuts settlement times from days to minutes, and its smart anti-fraud platform that reportedly prevented nearly RMB 12 billion in potential losses last year. 3. Innovation Sandbox. The final bucket supports high-risk, high-potential explorations such as generative AI, micro-expression analysis, and advanced healthcare diagnostics. Many experiments may not scale, but the few that succeed, like the Ask Bob AI assistant, are rolled out across Ping An's vast network, multiplying value group-wide. Together, these 3 layers ensure Ping An's innovation remains bold, scalable, and financially disciplined. Ping An's transformation is no longer an aspiration. It is already operational reality. Ping An has rebuilt its life and health business into a fully data-driven healthcare ecosystem. Through Ping An Good Doctor and its proprietary AI doctor, the group now operates one of the world's largest digital care platforms, seamlessly linking 4,000 hospitals, 50,000 medical professionals, and 150 senior care institutions across China. Its AI engine can diagnose more than 2,000 common conditions with 99% navigation accuracy and 95% diagnostic precision. Every consultation, medical record, and wellness activity flows back into Ping An's vast data lake, sharpening underwriting models and enabling insurance products tailored to each customer's unique health profile. Ping An's elder care program, serving over 210,000 clients across 85 cities, integrates wearables, sleep sensors, and fall detection radars into a 3-tier concierge model: Doctor Concierge for telehealth and chronic disease management, Lifestyle Concierge for services like cleaning and meal delivery, Smart AI Concierge for voice-activated assistance and emergency response. If a health anomaly is detected, the AI Concierge instantly contacts the customer, alerts family, or dispatches emergency services. What started as a health initiative has become a growth driver, with participants holding 3.5 times larger policy values and 4 times higher assets under management than non-participants. In its P&C division, Ping An has redefined claims and risk control through automation. Its AI-powered auto claims platform processes over 50,000 claims daily, allowing drivers to photograph accident damage, In seconds, the system verifies the vehicle, identifies parts, estimates repair costs, checks for fraud, and issues compensation. Fraud detection is equally advanced. In 2024, Ping An's smart anti-fraud system prevented nearly RMB 12 billion in potential losses by analyzing behavior patterns, payment history, and social network data. Ping An also deploys Eagle X, a machine learning-based disaster forecasting system that integrates satellite imagery, remote sensing data, and meteorological models. In 2024, it issued 10 billion alerts, helping 67 million customers mitigate losses from natural disasters. The economic outcome is twofold: fewer claims and faster settlements for clients, and lower loss ratios and higher margins for Ping An. A win-win for both society and the company. In Ping An's integrated finance division, AI-driven customer matching algorithms analyze spending and savings patterns to recommend the most suitable financial products, boosting both conversion and retention rates. In wealth management, predictive models optimize asset allocation and identify early signs of delinquency, improving both yield and risk control. On the front line, Ask Bob AI showcases Ping An's application of generative AI. Serving 360,000 agents, it answers complex technical questions, drafts proposals, and provides real-time coaching. In 2024 alone, Ask Bob processed 13 million queries per month, driving 13 consecutive quarters of double-digit productivity growth among frontline agents. Together, these systems allow Ping An to operate with a level of speed, precision, and consistency far beyond human capability. Across all divisions, Ping An's technology delivers measurable results on both social and economic fronts. Service quality and experience. Customers receive instant, personalized responses and seamlessly integrated solutions. Cost efficiency and productivity. Automation and AI-assisted agents have significantly reduced human costs, improved productivity, accelerated policy closures, and expedited claims processing, all while expanding operating margins without hindering growth. Risk management and resilience. Advanced analytics prevent billions in potential losses from fraud and natural disasters, bolstering Ping An's stability and enhancing public trust. Despite its progress, Ping An's market valuation still reflects an outdated narrative. Three forces drive this persistent gap. 1. Macro and policy overhang. Global investors continue to associate Chinese financial stocks with regulatory uncertainty, property sector weakness, and cautious consumer sentiment. This broad macro drag overshadows Ping An's strong solvency, solid balance sheet, and steady profit growth. 2. The complexity discount. Ping An's integrated model, spanning insurance, banking, healthcare, and technology, is difficult to benchmark. Its tech assets are consolidated deep within group results, obscuring their standalone value. As a result, investors apply a conglomerate discount to what is actually a synergistic, data-driven platform capable of extracting recurring customer value. Number 3, delayed recognition of technology payoffs. Ping An spent over 15 years building digital foundations, data centers, unified databases, cloud architecture, automation, necessary for scale, but slow to translate into visible financial gains. This progress was further masked by 2020 to 2022 pandemic headwinds, restricted in-person sales, higher medical claims, and weaker investment returns. Efficiency improved, but macro forces drowned out the impact, creating the false impression that R&D wasn't paying off. The inflection came only after 2023, when generative AI unlocked the ability to fully utilize Ping An's vast data. Tools like Ask Bob, the AI doctor, and the Smart AI Concierge shifted technology from back-office infrastructure to frontline intelligence, directly improving customer experience, retention, and revenue. After more than a decade of building digital foundations, the financial payoff is finally visible. 2024 marked a clear inflection point, showing that Ping An's technology-driven transformation is now delivering measurable results across all major segments. Ping An's Life and Health division is showing its strongest turnaround in years, reflecting AI adoption at scale. New business values reached 28.5 billion in 2024, up 29% year-on-year, and continued accelerating into 2025, rising 46% year-on-year to RMB 35 billion. Persistency improved sharply, with the 25-month ratio up 3.3 percentage points in first half 2024 and further to 4.1 percentage points year-on-year in first half 2025. AI is no longer just a cost reduction tool. It has become a growth engine, strengthening both top-line expansion and recurring revenue quality. Technology is reshaping Ping An's P&C economics through smarter risk analytics and fraud prevention. The combined ratio improved to 97.8% in first half 2024 and further to 97.0% for the first 9 months of 2025. Premium income rose 7.1% year-on-year, reflecting disciplined growth and sharper risk pricing. Behind these gains are AI underwriting models and smart anti-fraud systems analyzing behavioral, financial, and environmental data in real time, creating a more resilient book, lower volatility, and improving underwriting margins. The finance plus healthcare plus senior care integration is now showing up clearly in customer behavior. Ping An served 236 million retail customers in first half 2024, and almost 25% held 4 or more products, a record in cross-product engagement. Retention reached 97.8%. Customers engaged in Ping An's health and senior care ecosystem accounted for over 68% of L&H NBV in first half 2024. These metrics confirm the power of Ping An's integrated ecosystem. Rising loyalty, deeper engagement, and higher lifetime value per customer. The data flywheel in full motion. What could change the narrative? Several catalysts could finally force the market to revalue Ping An. Earnings acceleration from AI-driven productivity gains, and the monetization of Ping An's health and senior care ecosystem are beginning to lift margins and create new, higher retention revenue streams. As this shows up clearly in financials, Ping An could shift from being valued as a slow insurer to an intelligent financial ecosystem. Recognition of fintech and health tech assets. Subsidiaries like OneConnect, Ping An Good Doctor, and Ping An Technology are gaining international traction. Clearer monetization or spin-offs could unlock value and highlight their true worth. Improving sentiment on China. Any stabilization in property markets or policy support for consumption would lift the entire financial sector, with Ping An benefiting the most due to its deep middle-class exposure. In essence, Ping An executes like a 21st century tech powerhouse, but is still priced like a 20th century insurer. When perception catches up to performance, the re-rating could be swift and decisive. In summary, the 3 pillars, life and health, property and casualty, and integrated finance, is the foundation of Ping An's data advantage. Each division generates vast streams of behavioral, financial, and medical data. Yet, what makes Ping An unique is how these pillars are interconnected, feeding a unified AI ecosystem that learns, models, and predicts with remarkable precision. In this way, scale is not a constraint. It is the first prerequisite for intelligence. Over the years, Ping An's disciplined investment in technology has quietly built a barrier that is now almost insurmountable. From foundational infrastructure like data centers and proprietary cloud systems, to applied solutions such as AI underwriting and health tech integration, every layer of investment compounds upon the last. The result is a one-stop intelligent platform that can personalize offerings, cross-sell seamlessly, and deliver insights across insurance, banking, and healthcare, something that even global peers struggle to replicate. Yet, despite this technological depth, the market remains slow to adjust. Macro and policy overhangs continue to cloud sentiment toward Chinese financial stocks, while Ping An's complex integrated model makes it harder for traditional analysts to value. Most importantly, the financial impact of technology has only recently begun to surface, creating a time lag between execution and recognition. This delay explains the persistent mispricing, where Ping An's valuation still reflects the past, not the digital organism it has become. But that picture is beginning to change. Signs of technology-driven payoff are now visible across the board. Life and Health's new business value has surged, persistency has strengthened, P&C underwriting margins have improved, and customer engagement within its health ecosystem has reached record highs. These are early but unmistakable indicators that the company's years of R&D are finally translating into tangible economics. When the financial benefits of technology become visible in the earnings line, the market will no longer view Ping An as a traditional insurer, but as a technology-powered ecosystem that happens to sell insurance. When that perception turns, the re-rating could be swift. As for me, I intend to stay patient. I've held Ping An through nearly a decade of cycles, and I believe the company is now entering the most interesting phase of its evolution. If the stock dips further amid short-term volatility, I may even accumulate more. Because in my view, this next wave of growth, the one driven by data, intelligence, and compounding technology, has only just begun. And as usual, the above is just my personal perspective, not financial advice. Please do your own due diligence and consult a qualified financial advisor before making any investment decisions. Goodbye, and have a great day.